are you? Where are you? Here you are. Alright, good morning everybody. Today is Wednesday. No, Thursday. What am I talking about? Thursday, July 24th. It's 2025. I just want to make sure that my audio is coming from the right source. Just says default. Okay, so I think now I got the right source. Got the right source. Now I just want to make sure that I'm live on the actual day. Here. Okay, so we got Thursday. Cool beans. So we got this thing still going here. And now lots of interesting price action been going on lately. Seeing the bonds here have a huge expansion lower. Since we've opened in July, how have we been behaving in the months of July? How have we been behaving? Opened, low, just rallying up higher. See that? As predicted in the monthly seasonal tendency for US 500 stock market, making those high rally. Interest rates are finally pulling back up, but the dollar seems to want to go in tandem with that too. Okay. Let's go up here to the 4 hours, see how things are going. Nope. Yes. Look at that. How I reacted off OTE. Did it know? I'll show you. Opened. Reacted off OTE. Set higher. So that's good. So now still looking for bullish prices. Yesterday it was very, very hard to trade. I left the stream saying that I wasn't really sure of which liquidity will be engaged first. It was challenging in the sense that there was a lot of phantom legs occurring. So I was saying that we had this buy side program in effect. It was from this low to this high. This high that was going down, there was no correct correlation. Then it started doing something like this, started to create another phantom leg. So I was anticipating reacting off old session highs that were from this leg, from this high to this low, and seeing if that can give us some SMT divergence to create a minor sell side delivery program so that it can start sending price lower for a much more deeper discount area. Have a correct correlation there and send the price go higher. What happened was that it ended up creating this phantom leg of a phantom leg, so from this low to this high. Now we're referring back to the old highs here, and there wasn't anything formed that was enticing to me, like in terms of another cracking correlation. Everything was just kind of in sync. Wednesday we traded down to the 12 a.m. opening price, which was something that we were looking at in terms of a scalp. It was like a 1.8 RR trade, but it blew through that, went down lower, not necessarily taking down the low that we were interested in, but instead reversed back up based on New York London lows, and then ended up creating this expansion upwards. And it only just went up further, retraced down to this, I would say order block, expand higher, reached above Asian highs, going up for that New York AM highs. Now the New York AM highs were the highs that I was anticipating price going for first, before I can use that as like a reversal to send us lower for a sell program to initiate. And we will start reconsidering that. But we'll see that if we take the New York AM highs, high to higher high, high to higher high, that's kind of working in tandem. Let's see here. Okay. See here as well on the Dow, high, higher high. So everything was working in tandem here. And now we're reacting up these old highs. The swing, not this one. We formed a swing low here from this high, this low, lower low, higher low. So I would refer that to as a swing low. So we got these highs here that were reacting. We have a high, lower high. Look at this. High, higher high, high, higher high. So I would refer to this as it was already tapped, even though it didn't, but it's siblings, if you will. The siblings of the NQ, so the down, the ES, those are siblings. Those markets tapped out liquidity. This one hasn't. So what could I anticipate that moving forward? It will be an easy run on stops, so that if it was to retrace lower, it can be an easy way for it to go up. Or it could be treated as a protected high. So if it comes back up here again, it can shoot down lower, which is kind of like what I wanted to act right now, because we had that SMT divergence on the highs. And the only thing that's throwing me off, however, is that we had this higher time frame buy program occurring, had a low with no form of divergence. Okay, so I don't see any reason for it to go up even higher. And now it's back up to these highs again, where it's looking like it wants to make people feel like it's gonna go up higher today. But I really do think these sell side liquidity pools are our target. So maybe yesterday was really obvious where it was trying to go. Like I said, AM session highs. So they try to divert people like that by making something like this happen. These crazy price lower to scare the longs, only to then take them up to where they were initially going to be offered. As well as now that we're up here in these extreme premium areas, we're seeing this reaction occur on the highs. I'm not feeling really confident we're going to continue up going higher. I really do think we have to go down here to discount first. This to me is interpreted as like a, high resistance liquidity run condition, possibly even seek and destroy. I mean, if we take a look at our fibs, let's see here, fibs. Our fibs are based on the previous chart. See, we're referring to this higher time frame buy program, low to high. And that's based off our, oh no, it's based off our weekly chart, I believe. Let's zoom out here for a moment. Yeah, you see, if this big buy program that started here to this high. See that's where I've anchored my fibs from. But something else that I'm seeing too are literally a couple of type 2 dealing ranges. where we can anticipate a market reversal pattern occurring. So if I disable this and I look into my dailies, you'll see that there's two dealing ranges here stacked out from this low to this high, and from this low to this high. There are two type 2 reversal pattern dealing ranges. Yeah, it's from this low to this high, this low to this high. But so I'm thinking that could also be another interesting draw. And also look at what just happened here. Are you seeing what I'm seeing right now? This is CFDs, right? We made a high, higher high. And look at MEQ, high, lower high. We might have some bearish positions here in our hands, folks. Okay. Quadrants, white. Have we crossed above 25%? Yeah. We need to be very careful because we could do something like this. See that? Head down lower to these lows because of their type 2 dealing range setup. I'm just not feeling confident that we are gonna make higher prices again anytime soon. It really needs to head down to deeper discount. I mean, if I was making the market right, yesterday was a really good fool's play. Like seeing how we went down first to scare off the weak longs, only to them take them to their preferred target, which was New York AM highs. And now we're seeing again the teasing effect occur. Now we're looking like we want to make a higher expansion, only to treat that as an SMT to go down lower. That's what I really did think is going to happen. See, we had 0 GMT. How else can we investigate this market? Let's see here. Actually, I'm curious about something. Okay. So it's 9 o'clock now, right? Let's see here. I mean, I'm wondering if we're having something like this done too. Let me refer back to this high from, what is this, 7 a.m.? Let's see here. I'm sorry, 7:41. So I'm seeing another market reversal type pattern. Okay. You know what? Something I did not check was the news today. We have these 9:45 news, red candle, red alert, red folder news. Nothing too crazy like an FOMC or an NFP, non-farm payroll. Okay. Now we're also gonna have this too. Check this out. We have this 8:30. One moment, guys. I really do think this guy's gonna have to get down lower first. Let's have OT level. See that? So I wonder if that's gonna be used to make price go down lower too. Remember, we have closed down below 25%. So this is looking good. SMT on previous highs. Okay. So we attached our fibs from this low to this high, creating that minor sell side delivery program. And then we've crossed 25%. Notice this white line. Crossed down below it. So we're just looking for a reason not for price to head down lower. We had these type 2 reversal dealing range occur. So I was anticipating it going up to these higher highs up first, but I also forgot to mention that this is also a good idea. If we're looking for any reason to go down short, it's also reasonable to look for it in the form of an OTE pattern, where we have this anchor high to this anchor low, trade up at the 705 level and see price could react from it, with speed, and see if that can make it go down lower as well. Okay, I really thought that we were going to use it to go to the highs first, because that has also occurred. But oh, this is good. This is good to see. I don't see any other lows here to be taken except the PM session lows from Thursday. What's today? Today is Thursday, silly. From yesterday, sorry. So I do believe this is where we could possibly be going. Okay. and make the sell side liquidity there. Just a little bit above it. That would have been the entry for the day, and seeing if that will take price to go down lower. Okay, what are we also seeing? We're also seeing a breaker here. I'm sorry, this occurred. I call it a failure swing, bullish, but we're in a higher time frame, bearish trend. So I do want to see it act as a inverse mitigation block. Just high. I don't think we quite tapped it. There you go. Okay. And then lastly, you had this one too. Let's see what else we can get in here. We also had a type 2 dealing range for it to head down lower. I'm wondering if this would be considered an implied fair value gap that you could have taken. So if we take the consequent encouragement of this wick and this wick too, we get this gap formation. Okay, and I'm just eyeing it, but look at the closing and the opening of these two candles. Very close to the high of the fair value gap, and that's just me taking an approximation. But I'm wondering if that would also have been a good trade for you to take so that it can head down lower. Maybe we could set like a 20 handle stop loss there and see if that will be the entry to take prices down lower to yesterday's PM session. So I kind of see that like as like a model 2022, but without needing the fair value gap to show up, we can just have an implied fair value gap and see if that will be the one to take us down there. There's also a couple of things here that I'm seeing in terms of the implied dealing range, because if our buy is that we'll be going up to this high to get things down lower, I'm interested in seeing this act as our implied dealing range as well. Where are you? Implied dealing range right here. Dealing range, and then change that color to like purple or something. There you go. So anything above this equilibrium price point, want to see it act as excuse me, you want to see as a reason for it to get down lower. So another PD array I would have is the inverse of this mitigation block or this failure swing. See if that will act as resistance, and then again have a 20 handle stop loss, and see if that will be a reason for us to take prices even down lower. You know what? Since I'm doing this, let's just see if we could take that trade. I completely forgot I had a demo account. So 20. So let's see if that gets triggered. And then, yeah, okay. Hang on. There you go. And then see if that will take us down lower. Why? Because I'm seeing this orange box here as my inverse PD array. If it was a mitigation block going bullish first, but I'm anticipating it to go down lower, I'm looking for this to act as resistance so it can get down quickly to the PM session lows. So how many entries have we seen so far? We had the high here to react off from. We had the OTE level. We had the implied fair value gap reaction. And now we're reacting off the inverse mitigation block PD array. So again, aiming to see if we'll head down to PM sessions Wednesdays. Inside of this minor sell-side delivery program, which needs to occur so that it can get back in tandem with the higher time frame buy-side delivery program that's in effect. Smart Money is looking to get down to much more deeper discounts so that it can get those liquidity pools that we mentioned in the higher time frame so that they can accumulate more longs, offset those people who are weak shorts, and weak longs, weak shorts. I'm confusing myself. Point is, it has to get down lower. that's the prediction of 2025. Okay. That's kind of like the bias that I'm working with today. I can be completely wrong, and it's just the part of trading that you don't always have to be right all the time. But I am working off the higher time frame in mind. Okay, and I'm holding these entries up until 10 o'clock. Especially this one. Yeah, 10 o'clock entry. Now at 10 o'clock, what are we gonna see? 10 o'clock, if we've left already our entry point, immediately set it down to break even the trade. If it's 10 o'clock and we haven't let this external say, and if we've left this external range liquidity before 10 o'clock, set it to break even as well. Okay? And then as well as if it's 10 o'clock and we're still diving inside our stop loss range, I will give it till the end of 10:10 for it to continue down lower. And again, see if these seems like it's gonna be the way because of the way it reacted off higher here. Made that higher high, but futures, it didn't. Okay. So where would you have had your highest position? At the old high here of this dealing range from this high to this low. Second highest position would be here at the OTE. Third highest position would be down here. And the lowest position would be down here. Where is the first percentage fair value gap? I don't think we have it yet. No, we don't have it yet. You could say this is the first percentage fair value gap, but because we're in this sell side delivery and seeing how price made that swing low, this would already be balanced. So I'm not counting that as my SIBI. This would be a good SIBI. I'm sorry, busy. Good first percentage fair value. If it closes a little bit above it. Okay, notice how we're going back to the implied fair value gap again, reacting up its low. Okay, well, I don't think that was a fair value gap here presented. But it's interesting, no? How I reacted up that implied fair value gap, kind of just wicked in there. So this kind of shows like a sign of strength, and we'd like to see it just immediately keep down going lower. If we go back up there and close around that area, I'm talking like the midpoint or upper quadrant, that's still fine. I just prefer not to see it like that. Right? Next entry we had was the SIBI here. Okay. Yeah, that's interesting. The way that it did back down to that OT. And now we're back to challenging these highs again. Remember, we have that 9:45 news that we had. There it is, 9:48. Okay, 9:45. What else do we have here? get rid of that third value gap to keep things clean a little. We had the dealing range here, okay? Okay, this will be an interesting breaker. Trade down below it, see if that will be getting respected. Let's mark this yellow. Okay, that's my super lower time frame breaker. So this breaker would be a reclaimed bearish breaker. That's what I'm trying to seek. It will act as a what you may call it, as a reclaimed bearish breaker, right? Because that was something that was traded to above its high, going up higher. Now that it's coming back down here again, I would like to see it get traded down through and reverse down lower. Okay. So something I noticed that when the candle opened, wicked above, and then immediately closed down below it. Right? I'm ignoring this candle. I'm just looking at the 953 candle and seeing if that was like a, what you may call it. I'm looking at how that candle reacted. 953. I can highlight 953 candle, and we mentioned that it was going to be acting as a as a reclaimed bearish breaker. Okay, and as we trade it back down, we're looking to see if that's the case. Ah, shish kebab, really? I guess even I make mistakes. Oh boy. Sorry about that. Where are we back to? We are back into. Okay, so this would have been stopped out. This would have been stopped out. That would have been crazy, right? So that 9:45 news. Where's my music? Come on. So it's about to be 10 o'clock. The good entry so far would have been that OTE. Oops. Doesn't it get annoying when it's so busy like this? Okay. That OTE trade, set your stop loss to 40 handles, right? And then see if that will take us lower. First, like it did. Then it went back up here for the red folder news that we discussed at 9:45. Tapped our area of entry again, that's okay. As long as it doesn't stop us out by 10 o'clock, because that's kind of like the range in which I'm letting it refer to. It should be just getting down lower to PMs. PMs, and sorry about that, it's Wednesdays, 152 candles. So I'm looking for it to aim down here. Oh boy. Let me lock you in. So I don't. See, that's the thing with TradingView that I still even find myself making mistakes on, like on my drawings. Like I do want it to move, but there are some drawings that I don't want to move at all because I'm referring them to my higher time frame, and I still end up finding a way of dragging them over. Okay. So it's 9:57. That macro should be in play. Let's see if we can change this color to red. I think I like red better. Okay. Okay, we're still looking at this as a reclaimed bearish breaker. We're still back in that implied fair value gap again. Okay, inverse implied fair value gap, and now we're looking at it being a reclaimed implied fair value gap. Reclaimed, yeah. As well as where's our first presented fair value gap? Right here too. Just so happens to be our first presented right there. Let me move this so that this red box doesn't get confused with the other red box. Okay, and now that we're approaching the 10 o'clock hour, okay, what do? We update our markings. So I'm going to take a screenshot of this, see if this is going to be something we can refer back to in our studies. Okay, and now we're going to look at to the new hour, right? Let's see. Okay, so I see another type 2 dealing range occurring where this it's already 9 o'clock, and we're going to refer that to 11, and then we're going to do something like this: 60U type 2 dealing range. So you saw how the reaction was from that reclaimed bearish breaker. You saw the inverse, or the, how can I tell it? Yeah, the reaction of the first presented fair value gap in the form of a busy, traded back down, became an inverse, and went up there again, and then decided to challenge it again. Because the higher time frame premise was that we've closed below 25% on a minor sell-side delivery program. So we're looking for a retracement back up. Any reason to get into a short? We had a type 2 right here that we reacted off of the OTE level, not once, but twice due to the red folder news. And now we're looking to seek if this second leg lower, it's challenging the premium PD array so that we can send it down lower. Okay, how lower? We're aiming for yesterday's PM session's lows right here. So we'll see if that gets hit. I made a mistake here on my end. I was doing something, and it just, it's whatever. Oh yeah, and then we have this implied dealing range from this low to this high. Looking to see if any premium PD raise up in this quadrant will be a cause for it to get down lower as well. This is where we want to seek our entries from this high, from this equilibrium point to this high. And it will actually be anchored to this high because, yeah. What are we seeing here? Okay, we're seeing a breaker. I'm sorry, not a breaker. A dealing range from this low to this high. Okay, 9:30. And we're seeing if till 10:30. We'll see if it trades back down lower, closes below it, trades back above it to 75% because it's going to be a new low, and see if that will be serving us a continuation on the downside. Again, this is our A leg, this is our B leg. So if it retraces back down to the anchor point, right, which is our A leg, closes down below it. The moment it retraces back up and challenges this balanced price range, we're looking to see a react of 75% so it can continue going lower. It can still go up to 50% or even up to here, but I don't prefer it. If it doesn't even get to 75%, that just means it's speed. It's really quick to get somewhere. That's a good sign if you're bearish. But we'll give it time. Again, this idea will play out till 10:30. And then lastly, 15U. What are we looking at you here? Okay, this is good news for the 15U here. This is going to serve as a future implied bearish breaker. So I'm looking for this low. The moment we hit 10 o'clock, right? 10 o'clock. Yeah, the moment we hit 10 o'clock, I want to see this low, from this low to this lower low, get filled as soon as possible. And we'll see that at the moment 10 o'clock opened, we have this big bearish candle down lower. So that's a good sign to see if we wanted to fill down to this low. Oh, great. Just hate it when the music ends. Now here's where it can get a little bit confusing because this could also behave in a time distortion manner where smart money doesn't want to make lower lows to accumulate more lows. Maybe they think it's too obvious. So what are they going to do? They're just going to keep pricing consolidation, engineering buy side and sell side that they can use to take out the weak shorts here, or I gotta fix that. The weak what now? If it takes out the sell side liquidity here, they can use that to sponsor the moves to keep going up higher. Right, but they need time to engineer it. Whoa. That looks so cool. Okay, remember, we're giving this till 10:15 for it to fill price. Okay, what other PD arrays exist before 1015 do we get to fill price lower? We have this order block, this whole buy side delivery here, medium threshold. We also still have that implied fair value gap here again, went up there again, and look how it's using that. It's funny, I'm trusting more the implied fair value gap that was reactive here in the form of a model 2022, but instead of it being a SIBI, it's now the implied SIBI. And so then we have the busy here, which is the first percent of fair value gap, and look how it was used to be reacted from again. Okay, the low here comes at 23 to 14.1, and the high here is 23 to 14.9. Oops. So did I mention that I was gonna fill before 10:15? This low needs to be met? Yes. Where did it have to go up to? Order block medium threshold, first percentage busy, and then the implied SIBI reclaimed. Now that we're out of here, remember what we said. We're going to make a new lower low. So it's okay if this trades up to 75% to continue that sell delivery program. Okay. So let me see, I can sell here. Set this like a high and then see if that will be continuation to go down lower. If it doesn't do that, well, what do you think? It's speed, right? Back to my point that it's going to be speed. The speedy boy needs to get somewhere. Excuse me. Oh, come on. Sometimes I'm just like the typos. Like I'm trying to do better. Okay, like I'm not trying to. I'm trying to type without looking at the keyboard, and I still make mistakes sometimes. It's just like, dude, I don't even have. I don't want to fix it. I don't want to spend the time to fix this thing. Okay, 9:45 news. We have nothing else going on today. Friday we got no news again. But next week, look at that. Uh-oh. I think I saw CPI somewhere. Our Australian markets. From MC next week. Get ready, y'all. Okay, let's take our FIPS, right? From this high to this now new lower low. Did we retrace back up to 75%? No. So this is a really good sign for me right now. If you're a bearish person, we're really wanting to go into speed now, speedy mode, and really get down to these sell side liquidity. Oh, I'm so upset about this right now. But it's okay. It's gonna happen again. Let's come back to this in a moment. I just really want to see what the heck happened yesterday. So yesterday after I left, it was like I think not before 9 o'clock. I did say that we were gonna head down to 12 a.m. lows. So you see, we had that entry taken there, and then we were aiming for that 12 a.m. lows, but we had to take ourselves out automatically because what you may call it, it had traded below our exit price, but it wasn't triggering. So I was like, I'm just gonna go in there automatically and do it myself. Moments later, 9 o'clock opened, went back up here again, traded above these buy side liquidity, but still treated this high here that was claimed on NQ. I'm sorry, it was claimed on ES, but it wasn't claimed on NQ. So this could also act as a protection, but again, nothing was promised to me yesterday because I saw it both ways. So it's interesting to see it that it got protected. Went back up to this buy side liquidity pool, and it immediately dipped down, but not low enough to get us to this London close here. And then we rallied back up and we aimed for that New York aim session, which was kind of like what we were initially aiming for, to just keep going up higher. But I guess there were some longs stacked up like I was, and just wanted to shake them off first. Okay, so now we made a new lower low here. So now, are we going to retrace to 75% here or equilibrium? Ideally, it would be 75% for it to continue down lower because we were met with speed on the first leg, right? So we'll see if the second leg now, this second expansion, would be a quick reaction as well. See a react of this civvy. And we also cross equilibrium. And again, that's just the first profit objective, right? I mean, we still got this whole range right here to fill. If this minor sell side delivery program is true, this SMT that we have crossing down below 25%, this is only the beginning. Crossing back down to equilibrium would be the next step, right? But our Wednesday PM session liquidity just happens to be a little bit below the equilibrium. So what else is next? To fill down to London close. So what you could do is, you know, take partials along the way. So you would be taking a partial here, equilibrium, take a partial here into the Wednesday PM session, and ultimately the London close. Ideally, right? Ideally. Okay, because now in a sense we have this, we have this, what you may call it, minor sell side delivery program. These legs are in areas of interest that we can see another form of SMT, and then we'll have a minor buy side delivery program that we can use that as an expansion to keep going up to higher prices. Okay, there won't be any more phantom legs because this is actually anchored now to something that's factual via SMT. And that's something that I've been just trying to get better at. Let me see if I can make these positions go down to break even. So 10:15 yet? Oh, it's already 10:18. Perfect. So now we'll just update this. What are we seeing here? Okay, we're seeing something like this occur. I don't like seeing that it's all the way up here. We can get rid of this now. I don't like seeing this right now. The fact that it's all the way up there right next to my stop losses. We can get rid of this one. Yeah, that's fine. Because it can retrace up to here. Since this is not supported by anything, this 15U, it can simply trade back up here via turtle soup, and I'll be triggering my stop losses. Oh boy. No, I don't want to see that right now. Wondering this. I wonder if this SIBI, since it's being so close to equilibrium, if this will be our measuring gap. I'm sorry, not a measuring gap. Yeah, it's just, isn't it the measuring gap or the mid gap? So gaps we don't expect to get filled are, you know, this one. We had this balanced price range, so this one I would not like to see it get filled. Actually, yeah, because this was the gap that took us out of this dealing range, balanced price action. So I'm just going in there to see how I would be behaving if this was a real live trade. Okay, so we're not closing above the breakaway gap here, so that's good. That's a good sign. What else are we seeing? The start of the mini macro begin as well. So it can run for stops or inefficiencies. It's acting like it's taking its time to get there. I mean, what? I haven't checked into my. Maybe I should have, right? But I haven't checked into the opening range gap for this morning. Let's get rid of you real quick. Let's get rid of you and go into protract. Let's see here. There we go. See, what do we have here to take on? I see. It's not much of a gap anyways, but look at that. Talk about high resistance liquidity runs. Can we have this high? Okay, let's refer to this one. Oh, oh. Um, that's a gap close, and then there's open, open down here. $27 handles, right? Give or take. So yeah, that is okay for a high resistance liquidity run condition. Okay, the macro is about to end here. The mini macro. Let me show you this again. So now that the 30U is about to accomplish its task, right? Let's see how we compare, right? We have a low, high, lower high at the start of this candle's open, lower low. Now, when this candle opened, look a little bit before it, there's a higher high just above it. So I'm going to include that next for my balanced price range because from this low here to this high, it's balancing the sell side delivery from here. So I'm going to extend that just a little forward. Okay. And then we're going to refer back to this until 10. Okay. It's going to be a, actually it could be considered a type 2 reversal as well. Hold up, actually. Not that I want to see price continuously go up higher, but see here. Yeah. So it can see this as a type 2, or check this out, another reason for price to go down short, which just happens to be right above the high here. And then we have the 15. This is actually a real block right here in the form of a failure swing. So that's an actual mitigation block. Okay, so what am I eyeing right now? I'm eyeing this high to this low. Still. So we could even see price refer back up to these levels. Take out not only the high of this daily range, but it's also the OT of this high to this low. Oh wait, hang on. I misread that. Yeah, I misread that. This is actually from this low to this higher low. We're looking for that to be a reversal, and it did, claimed it. So there's that. I'm wondering if this can also be interpreted as the same, where we had dealing range low to high, and now that we made this new expansion down lower, will we be retracing 75 up to equilibrium levels to continue the lower sell side delivery? I'm wondering if that would also be something to consider. So I'm going to set myself an alarm here. As it's crossing down lower and see if that will reach the Wednesday. Okay, just a little bit above it. Again, there's a CFD, so inaccuracies can occur. But again, this whole thing could be time distortion. It's already 10:30, right? So let's take a look at this thing here. Okay, notice that we're also generating more buy-side liquidity here too. So I'll be very careful. Okay, I'm talking about this right here. That was reacted off way early in the morning. We're challenging this area that should not be left, that should be left unfilled. I'm gonna go ahead and cancel 50%. I'm not liking that we're challenging this breaker gap. It should be a breaker gap, which means it should be left unfilled, and we're going back up there again. I'm not liking this. As well as now I'm seeing reasons that price can reverse from the moment 10:30 began till going back up here again. Not liking that at all. As well as now we have generated a new buy side interest. So again, this whole thing could be like a higher time frame time distortion to generate more buy side liquidity, sell side liquidity, and making smart money kind of like make themselves bet in a position, be in a position that continues this higher time frame buy side delivery program. Okay? Okay, so we're stopped out there, as you saw. We're still in the red, which is fine. Trying to make up all those losses that we had earlier. Looking to see if this would be an interesting area for price to sell. Whoa. So I'm not liking the fact that it's already 10:40 and we're still not seeing the prints of lower prices. It's funny to take note that we're back into this implied fair value gap again. First presented fair value gap here, busy. Balanced here. There's a little area of balanced price for action that I don't want to see trade back up to, and that's being used to get back down lower. Now I would like to see this act as turtle soup go up higher, since it's so separated. Wow, it went from super exciting price action to really lackluster price now. And once again, I mean, whoever's in control, they could just easily keep this in consolidation. They're already formed a new buy side liquidity pool, so that's one thing that was left behind in the business. But I'm still aiming for this Wednesday PM session low. I really would like for price to get down there, right? But who cares about what I think? And it's getting late too. So I'm just gonna give this. I think I'm gonna end the stream for now. I'm gonna leave this alarm here on. So let me know whether or not we hit that level, or it could be just the AM session, as a whole. So we could be waiting for something to happen during the lunch or PM that will take price down lower. So we'll see what will end up happening. All in all, hope you enjoy the stream, and I'll catch you in the next one. Take care. Oops. Where's my Streamlabs?